Hello people, welcome back to IS Traders. So we all know that I trade smart money concept. In this video, I'll be talking about my simple smart money trading strategy without wasting much of our time. Let's get started. For this simple system, the number one thing to do is to identify the market trend. So identify the trend, and whatever the trend is going to tell us what direction we are going to focus on, right? And then number two is to identify where the market is currently. I think this one is the default because definitely when you hop on the chart, you will see where price is currently. So where price is in relation to the trend will tell you where price is likely to go. Then the next thing after that is to identify liquidities. All right. So if you trade smart money or if you are new to smart money, you should have understanding of liquidity already. If you don't have understanding of liquidity, you have to learn that. All right. So you have to understand liquidity, the types of liquidity. So after looking at where price is, or after looking at the trend and looking at where price currently is, you have to understand where liquidity lies and which of the liquidity price is chasing or which liquidity has price just taken. All right. So if you understand liquidity, because liquidity helps us to determine which of the concept about trend and direction, and which are what the swing points, help us to know when they are confirmed and when they are not confirmed yet. All right. So liquidity also helps us to determine the turning point where price is likely to have reversals. So when you look at the trend, number two, you look at what the current state of the market or the current price level, where price is in relation to the direction or the trend, and then you look at liquidity. Liquidity tells us when or how and where to join the market. So let me practicalize for us to understand properly. And before we get into practicalizing what all I just explained to us, I want you guys to put in the back of your mind that whatever you trade, this works because we are all trading what the Japanese candlestick. So this works on everything. For those of you in the Discord, I'm sure you are conversant with this setup and also the setup we had on GBP USD today. All right. So if you're in a Discord, I'm sure we are all conversant with it. This is the setup for the volatility index trade, and this is the setup for the GBP trade that is currently running. So if you are yet to join our Discord, please don't forget to check the link in the description. All right. Like I said, the first thing you have to understand is the trend, right? Where the market is going and where the market is. That is what you're supposed to understand first. And for you to understand that, you have to look at what the swing point, because it is the swing point that tells us where market is. Then after that, we look at where market currently is. What where price is, just like where price is right now. And then after that, we look at where liquidities are seated. Okay. So when we hop on a chart this morning, let's go back to the setup on Discord, right? When we hop on the chart this morning, you can see already this is what we had, and this is where price was, right? So this is what we had. So I'm going to clean the chart and reanalyze all of this and tell you guys why all of that was marked out. Okay. So when we hop on the chart this morning, we found price here, all right, at this candle. Okay, so if we found price there, this trading you cannot replay. I'm sure you all understand that. So we found price here, and our focal point is what? Identifying the trend. Okay, and by identifying the trend, we have to look at what the swing points. So if I'm to zoom out, which I don't really do because I like to focus on the current side of the market, which has the highest probability of playing out. If I'm to zoom out, we can see that we are kind of like in an uptrend. We was in an uptrend, right? For the current swing point that we have, which let me mark out the current swing points. We had this, right? This wasn't a swing yet because it has not interacted with this pullback. So this was yet to be a swing. So this was our last swing. This is a swing as well. This is a swing as well. And also this is a swing. All right. Yeah, I know this is also a swing because I know it's going to be there in your mind, right, that this is a swing. And this was also a swing, right? So with this swing, we're going to identify what price is saying to us. All right. So from the first thing we have this guy. We're in an uptrend, right? So we know that we are looking for price to pull back, give us a confirmation that yeah, the pullback is done for us to continue the uptrend, because you can see from here we are trending up. All right. So we have this guy interacting. How you identify what price is telling you based on the swing is for you to understand the interactions between swing points. What does the last swing came to do with the other swing, right? So this swing point was created, right? Price pushed up, price took a pullback here on the impulse that came down, right? Before the pullback, when price takes a pullback on that impulse, that swing point becomes valid. I'm sure those of you who are in the Discord understand what I'm saying. So this guy becomes a valid swing point. When price come to interact with it, price swept it, right? You can see when we say sweep, it's when price came through but didn't close, you know, below it. Didn't close below it. So price came down to this level, but price didn't close. Price pulled back up.
So the fact that price closed here, it became what? A sweep, a liquidity sweep. And we identified that to be a liquidity sweep because we know that from mass psychology or from what we used to trade, people who trade support and resistance will definitely want to buy here, right? They want to buy here, and I think a lot of buyers would have been, you know, lured into buying by that place, or no, buying at that level because we had a candle, a candlestick pattern formation there. So buyers already are there in the market, and price just have a little bit of push and came back down to take liquidity or their stop losses because liquidity is just stop loss, people's money, so that others can get paid, right? So price took liquidity there and didn't close below. If it closed below, we would have known that it is a break of structure, so we should be looking for what? Downsides. But price came through and then went back up, just collected liquidity and closed above. So it was a liquidity sweep. All right. So after liquidity sweep, what we are looking for next is for price to what? Interact with the last swing point that was created, which is this guy. Price came through it. Price came, approached it, and what did price do? If you align it very well and look at it very well, you can see that this time around, price didn't sweep it and just close below. Price went and closed above it. This candle closed above this swing point. So we have a break of structure right here. This is practically identifying what the trend is saying based on what price swings have said or what has happened within the price swings. So price broke structure here, meaning we are all in an uptrend. And we also know that from the behind, or no, from the bigger picture, we are in an uptrend before because price was what shooting up and then we are just having a retracement.
It's 6 o'clock.
Thank you, Samantha. This sweep identifies or shows us that this retracement is done and then another uptrend is about to happen, right? So we have a break of structure here. Price is pulling down. Like I said, by now, if you trade SMC, you should know what liquidities are. So on the impulse that break the structure, all the liquidities are lined up there. The liquidities that was simply the pullbacks on that impulse that break the structure. All right. So this was based on where we met price. We didn't need to, battle looking for where is the significant pullback because we already met price after it has taken the pullback. So that was easy for us, right? So price took the significant pullback right here. So this was the last liquidity price came to take, and we call that engineered liquidity because the liquidity as the extreme, right? So price took that liquidity. Like I said, liquidity helps us to confirm the swing point, right? So immediately the price took the liquidity. What did it do? It just like this, price came below here, it came below and closed above, meaning it just came to collect. It did not come to really break through. So price collected the liquidity that was, seated at this pullback, right? Price collected the liquidity and we know that it is time for another up move. Right? So that liquidity was collected, we made price here. Then for those of you that are in the community, you understand what we do with the medium time frame. Then we hopped on the medium time frame and look forward price confirmation to be able to continue the trend. This is just simply how it is. After identifying the trend will tell you where next is price supposed to go to because we have a break of structure here. We now know that what we are in an uptrend. We have to keep creating higher highs because price created a high here, which is higher than this previous high. This is a higher high. Now we are back here. Price have collected this liquidity and have swept, signifying what? A higher low, higher than this previous low. So we should be what? Focused on taking price to create more higher highs and more higher lows. And you can see we made price around there. You can see price pushed up and have now created a higher high, which is higher than the previous high. Price is currently here. We should be expecting what? Creating higher lows, higher highs, and higher lows like that, like that. So that is simply how it is. So for this current move, we should be expecting what? Price will give us the signals that it's time for us to have the pullback because this is what the expansion, this is the impulse, right? So when price is pulling back again, we will be looking at price to come to take what? A significant pullback, which is this guy. You can see this is a pullback, right? Price should come take like so and then pull, continue the uptrend. So guys, as simple as that. And we now know, if you didn't know before, we now know that the pullbacks that are on the impulse that break structure because we now see that this guy has broken significantly. I think this one is a primary thing. If you see, you know that price is significantly above. So when price is tracing from this whole impulse, what we look at is what the liquidity because we now know the direction, right? So looking at this current phase now, price broke the previous swing high, so we know we're in an uptrend. The next thing to do is what? Look at where price is. Price is currently here, and after that, we know that we should be looking for retracement. But until price gives us that signal, we have to keep waiting for that. So when price gives us a signal for retracement, what are we to do? We should look at liquidity, which is the next thing to look for. This is a liquidity because they are all on the significant pullbacks. on an impulse, right? This under liquidity here. So when price pulls back or when price gives us a retracement to all to the liquidity levels, whichever one that price gives the confirmation, then you can get to what execute and join the trend. So don't forget the key point that we have spoken about. The first thing is to look at the trend. Secondly, you look at where the market is, because after identifying the trend, where the market is will tell you what you should trade the market to. All right. So for instance, if we met the market, let's say here, if we met the market at this level, and we know we are in an uptrend and we're chasing what liquidity, we know that we should be selling toward the liquidity level. So always remember where the market is always remember to look at where the market is and where it's likely to go based on what the trend have said. And then after that, you have to identify liquidity, because the liquidity will help you understand where the market is also likely to go to. Thanks for watching and stay high.